Welcome back to our Dream Plan Retire studio. I'm Andrew Rafal, founder of Baintree Wealth Advisors. And as we come upon this summer season, many of you are going to take some time away, decompress, go on vacations. But what better time as we are mid-year to take a look at how you doing financial and retirement-wise? I know many of us set these goals for the New Year's resolutions and we abide by them for a few weeks or a few months. But then life happens. So we've got a couple of very important items in this checklist that you can do. Won't take you that long and can help make sure that you're on track. So number one, let's check your retirement contribution deferrals. So 401ks, what are you putting away? Can you increase that based upon your income and your expenses? So we want to take a look at that, as well as, are you putting money into a Roth IRA and making sure that you are systematically trying to hit that maximum amount if possible? And then along with that, it's a really good opportunity to just check your overall portfolio, both 401ks, IRAs, non-retirement accounts, and make sure that your risk is aligned with your current goals. Obviously, markets change, your situation changes. So it's a great time to take a look at things, and not really, a lot of people do is put their head in the sand. We don't want to do that. We want to see how we're doing and should we make any changes. Along with that, there's some tax strategies that you can start reviewing. A lot of our clients will look at Roth conversions as a viable strategy throughout the year to help position money that is in what we always call in a pre-tax, the forever taxed, and positioning that into the never tax. So a Roth conversion obviously has implications tax-wise for you this year. So you want to make sure if you're doing that you're working with your CPA and or financial planning team to understand the short-term pain, but the long-term benefit in ensuring that you are paying the least amount of taxes. Along with that, it's a good time to start looking at, does tax loss harvesting make sense for this year? That is where you sell some of your losing positions in your non-retirement accounts as a way to offset either capital gains or to be able to directly lower your overall income up to $3,000. You don't want to wait till December on that. It's a good time to look at that and see if it makes sense to sell some of the losers, and then how that will work to benefit you for this year or even years in the future. And then the other area that we're getting a lot of questions on is, idle cash. So, we've seen interest rates increase from 1%. A lot of money market accounts are paying between 4 and 4.5%. So if you got a lot of cash sitting at the bank, a lot of times you may only be making 1%. You may be making less. So you want to look at that and see, does the current bank that you're at, do they offer a money market account, or can you reposition that to something that's going to pay you a lot more interest? So that's a great way to make more money through the higher interest rate environment that we're in. And then when we look at some of the estate planning, charitable giving things that you can look at, number one, beneficiaries. So this is a big one. If you haven't reviewed the beneficiaries on your retirement accounts or your life insurance, you want to make sure that they're updated. A lot of times we see that as life changes and you get married or you have kids or there's a divorce or there's a passing, if you haven't updated your beneficiary form and something happens to you, the beneficiary form for those accounts or for that insurance supersedes any will or trust that you have. And we don't want an ex-spouse to be listed on something, or maybe you have mom and dad that you listed 20 years ago. We want to make sure that the appropriate people are listed on the beneficiaries. And it's a very easy checkup, but you got to make sure that you go through and make the change if needed. Also, with regards to charitable giving, this is where a lot of people wait to the last month to do their charitable donations. It's a good time to figure out how much you want to allocate, who you want to give it to. And if you are over 70 and a half, there's a great vehicle that you can utilize if you're charitable inclined called a qualified charitable distribution. This allows you to direct funds out of your IRA to a charity and have it come out tax free, meaning you're not going to pay taxes on it if done appropriately. So very important there. And then that also, if you're at the RMD age, can work towards lowering your RMDs. So qualified charitable distributions, great vehicle for you to look at and utilize if you're over 70 and a half. And then finally, when we look at employee benefits, so open enrollment for a lot of companies, our October, November timeframe. So you want to gear up for that and make sure that you review your health insurance to see what the company offers in regards to maybe there's some life insurance or a group long-term care policy. You don't want to leave some of these benefits on the table, and it's always great to review. In conjunction with that, the health savings account. If you have a high deductible plan, you may be eligible to put money into an HSA, and that is where you are able to contribute to the health savings account and get a tax deduction. The funds inside the HSA will grow tax deferred. And then if used for qualified medical or in the future Medicare premiums or prescriptions, the money comes out tax free. So just make sure that you're looking at the HSA. If you can take advantage of that, we love it because it's the triple whammy, the tax deduction, growing tax deferred, and then tax free when it comes out. So these are just 4 or 5 things that you can do right now here in June and July while you have some time to make sure that your financial plan is on track. If you have any questions, feel free to reach out to us. We're here to guide you to and through a successful retirement. Happy planning, everybody.